Heathrow reported 6.7 million passengers in April, a 5% drop, its sharpest annual decline since March 2025. Every headline framed this as an Iran war casualty, but inside that same number, transit demand rose 10%. The airport that the Middle East conflict was supposed to ground is becoming more indispensable to global aviation precisely because of it. Monday's FTSE 100 session reflected the same division. The index edged higher, but barely, with miners jumping on commodity momentum while defense stocks slid as European peace talk optimism briefly flickered. International Consolidated Airlines Group, IAG, owner of British Airways, climbed 5.4%.
The mechanism runs through jet fuel, not just airspace. British Airways owner IAG told markets it remains confident on fuel supply throughout the summer, a statement that matters because SHEL.L, which operates European fuel infrastructure, has warned the Iran conflict has created a deficit of roughly 1 billion barrels in the global supply picture, while its own profits hit a 2-year high. That gap is being bridged partly by U.S. jet fuel imports routed into European depots, a contingency measure that stabilizes Heathrow's operational calendar, even as it increases cost per seat. Higher fuel cost per seat compresses margin, but it also raises the barrier for point-to-point competition from smaller carriers. When fuel is cheap, low-cost operators can undercut Heathrow's hub model on high-frequency short routes. When fuel is expensive and supply uncertain, frequency drops and the hub's connecting function becomes irreplaceable. IAG's 5.4% gain is the market pricing exactly this, a compression and competitive pressure from the cost floor rising across the industry. The reversal condition sits inside that same logic. If a U.S.-Iran peace framework advances, oil was falling sharply on Monday on renewed optimism, and the FTSE 100 itself rallied to.
The unresolved question from the transit surge is durability. Heathrow CEO Thomas Woldby noted passengers want certainty when planning summer holidays, which is the exact uncertainty the Iran conflict provides. Year-to-date growth of 1.2% across total passenger volumes sounds modest, but it is built on April's 10% transit surge, suppressing a 50% regional collapse. Remove the transit premium, and the underlying traffic picture deteriorates sharply. IAP's bond repurchase move, launching an $825 million senior bond repurchase invitation on Monday, signals confidence in its cash position. Companies initiating buybacks under inflationary pressure are typically working from a stronger forward visibility than consensus assumes. The historical parallel is the 2003 SARS outbreak, which collapsed Asia-Pacific aviation demand and simultaneously rerouted global traffic through secondary hubs. Carriers that had positioned themselves as connective infrastructure rather than destination operators recovered faster and with stronger pricing power than those reliant on single corridor demand. The Heathrow transit premium continues if the Iran war persists in its current form, constraining Gulf hub capacity without resolving into a full closure that grounded Strait of Hormuz shipping entirely. Oil holding above $100 keeps the cost floor elevated and limits competitive re-entry from low-cost carriers. The breakdown scenario is a negotiated de-escalation. If U.S.-Iran talks produce a credible framework, Gulf hub capacity normalizes within weeks, transit premium compresses, and IAG's 405 pence level faces a correction the 5.4% Monday gain would then have overstated. The verification benchmark is oil's next close relative to $100, the level that separates the two regimes. IAG trading above 390 pence while oil holds above $100 signals the hub premium is being priced as structural. A close below both would indicate the market is already trimming that bet. What would prove the bull case wrong is not peace, it is the pace of rerouting reversal. If Gulf carriers restore capacity faster than analysts expect after any ceasefire, the transit premium collapses before IAG's cost structure adjusts. That gap between route recovery speed and cost-based flexibility is the variable the 5.4% Monday rally has not yet been asked to answer. Every day after the close, we publish a market wrap and key issue analysis. Subscribe to the channel.